Nigeria's Monetary Policy Committee has begun its first meeting of the year after much delay. Anthony Ake, the acting divisional head of infrastructure and transport at Diamond Bank, joins us to discuss some of the factors that the committee will have to consider this time around. Anthony, thank you so much for taking the time out to join us.
Thank you. Good afternoon.
So we've been talking a lot about what direction the MPC will go this time, and we know that first of all they're going to take a look at the performance of the domestic and global economies since the last time that they met. And of course the key question is always is, will the MPC tinker with the headline rate, which is currently at 14%? What are your expectations this time?
Yep, would they tinker with that rate? That's likely but highly improbable. And it's for the clear stance of the CBN governor. He hasn't hidden the fact that they want to watch the economic data over a certain period before they tinker with that. But yes, actually, they should do that because all the pointers are towards better times. Inflation has been decelerating southwards for the past 13 months. From 18.72 in January last year now to about to 14.3. You know, you have our FX there is now more liquidity in the FX market. Our foreign reserves have grown and are growing. Now on the global scene, oil prices have been high, and with the constraints that we expect this year, it's probably going to go higher. And you know, because there are shutdowns in Brazil, in Colombia, even the Harvey that happened in Texas last year. I mean, they're still below inventory rates. You know, so you have all the pointers for us to push economic growth, because what a reduction would mean is that, I mean, lending rates are meant to come down, and that is meant to boost production, boost employment, boost the real sector which the government actually wants to grow. So that would have been the way to go, but there has been this thing, you know, between the hawkish stance that they've actually pegged on since, and the loosening expansionary approach. You can see that the body language of the CBN is more towards the hawkish stance, and I think it's basically because they don't want to, let's say, tinker with what has been with the gains made so far. They want to be sure it's very stable, and. Yeah, and then you also have a lot of there are lots of pressures from different places for them to actually do that. But the governor wants to maintain this rate. He said that in January when he clearly said that they want to watch how the data would progress before they make such changes. But yes, that would have been the best cake in, best icing on the cake. And we as banks have an opportunity for us to increase our lending in the retail space, in mortgage finance, in leases, in auto finance. So yes, we're all looking forward to that. But it seems there's still a bit of fragility in the economy, which we're waiting to see.
Okay. So Anthony, the legislators are yet to pass the 2018 budget. How do you think this could impact the MPC's decision?
Yes, that's one of the key reasons why we would likely not expect a change in what we have, because the monetary policy is meant to work in tandem with the fiscal policy, and if that hasn't been released yet, if that hasn't, I mean, I think that it's meant to go live in April, in this April against May, So from May 1st, we should be running on our budget. So that's why I foresee a stance where the CBN would want to wait till this budget has been passed and everything made clear, so that they can tie in the policies that will come from the monetary side to fit into whatever fiscal policies that the finance ministry would want to put in place. So yes, it's a clear disabling factor to tinkering with the figures for now, and we wait to see how that would play out too.
Do you think that based on that, I mean, that being said, that the CBN or the MPC may point to some or more headwinds for 2018 if we don't have synergy between the monetary authorities and the fiscal authorities, that also throws up some issues of its own. That being said, on the other hand, there's the issue of banks. You talked about the fact that you're expecting banks, or we're hoping that banks will lend more this year to the retail sector, but there are also issues about the financial sector, the strength of the financial sector. I'm saying this based on report about the IFRS 9 that banks have to implement this year. There's talk about that may impact on banks' balance sheet going forward. Are they going to need more cash? Are they going to need to boost their balance sheets? Is that going to cost them to lend less to the economy this year? So these are some of the issues I'm thinking that the CBN or the MPC could talk about this time. Do you share those same sentiments too?
Yes, and no, because yes, the IFRS 9, we banks have to adopt it this year, and that would witness, a huge hit on our balance sheet because it's a stricter method of reporting. But then, you know what banks have been going through in the past few years. There's been a very high level of NPLs, and banks have been taking provisioning on most of them. And then, of course, most of the loans that we had created over the years, due to the economic hardship and the recession and the FX issues and, inflation and so much more, most of them actually went bad or, are a bit insolvent. So the only way for the banks to ramp up back is by creating more risk assets in those areas, but then now trying to create quality risk assets. And this is the time that the cycle is ending and the boom cycle is coming up. This is the time to actually create those risk assets because, if not, you wouldn't have the money to use to absorb the provisioning that you probably take from this bad loans. So I don't see that affecting the bank's appetite to lend. In fact, this is a year where we should expect to see quite some bullish activity there, but more guided than it used to be. So I didn't get the other thing that you had mentioned.
So thank you so much for your time and being a part of today's show, Anthony.
Okay.
That was Anthony Eke, the Acting Divisional Head of Infrastructure and Transport at Diamond Bank.